What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about Crowdstrike, ticker symbol CRWD, because they are going to be reporting earnings next week on May 31st after the markets close. So we're going to break down exactly what the expectations are. We're going to break down the technicals. We're going to talk a little bit about the intrinsic value for this business as well. As always, if you enjoyed this video and find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. If you're interested in joining us and of course getting access to all the buy and sell alerts, options alerts, trade ideas, all the private live streams, all the benefits, trading view links, and our fair values, everything's going to be included with the link down below. And there again is a 16% discount that does expire at the end of this month. We also do have the fundamental and technical analysis courses currently on sale, 60% off because of Memorial Day weekend in observance of Memorial Day. So the coupon code is going to be Memorial, all caps, and you can access those courses. 2 courses, 16 hours of content, 80 plus lectures, and like I said, there is a 60% discount that's available for just the next couple days. So link's going to be down below. So talking about Crowdstrike, it is one of the best cybersecurity companies in my opinion. I've been meaning to buy this company for the longest time. We actually had a swing trade idea on this stock, and now if I look back in hindsight, had we just simply held on to the shares of the stock here, it would have been up over 70% as opposed to the 25 to 30%, or in fact even 15% that we actually ended up making. So this right here was a swing trade, and again, I don't mean to pat myself on the back or brag about it or anything, but we did literally just had a trade idea at the bottom back in January of 2023. So literally earlier this year, at the beginning of this year, we had a swing trade idea on Crowdstrike, and it ended up rallying all the way up to $107, $108. Of course, from those levels, it is now up even more to about 50%, close to $155, right? So up another 44% from those levels. So, well, hindsight 2020, but nonetheless, it is one of the best companies, and the reason for not being able to invest in this company, for the long term, really is because of the lack of profitability, and of course, just the consistent operating losses and net losses. I'm just waiting for the company to turn the corner towards profitability. I think this year, in fiscal year 23, is going to be that time when they actually are able to do that. So you can see that very nice consistent growth in revenue, very nice consistent growth in gross profit, very strong margins for the company as well. But every single year they have been generating an operating loss. And this right here, net income also at a net loss here, just coming down $183 million. This right here is going to be that share count, so also increasing to over 233 million shares. So if you do the math, let's say 148 back in 2020. So we're just going to put 148 in 2020. And right now they're sitting on 233.1. So 233.1. They have increased shares by about, I want to say 25%, 25.5%. In fact, it might be a little bit lower, 16% every single year in the last 3 years, right? That's pretty substantial amount of share dilution. And that's another one of the reasons why I've not been able to fully be confident with the company in terms of a longer term position here. Like I said, 73% gross profit margins, very strong, but everything else is negative because of lack of profitability right now. Negative return on capital, negative return on assets, and negative return on equity because of the net losses, and free cash flow margins over 32.5%. So good gross margins, good free cash flow margins. The company needs to figure out a way to turn the corner towards profitability. Balance sheet's very, very good. So we've got little to no bankruptcy risk right now. The company's got more cash of over $2.7 billion versus debt of a little bit under $800 million. So they're sitting on negative net debt of $1.9 billion. Current ratio, quick ratio are both very good, and debt to free cash flow is also decent for the company, but the company also has negative net debt, so we can ignore that. And this right here is going to be those estimates for earnings. For 2024, $2.31 is going to be that consensus number. And for May 31st, after the markets close, 50 cents is going to be that EPS estimate on a normalized basis. On a GAAP basis, though, they're still expected to report losses of about 10 cents per share and $676 million worth of revenue. And we have seen 29 upgrades in the last 90 days for Crowdstrike. So 50 cents per share is going to be that EPS estimate, along with $676 million in revenue. Valuation certainly is high right now for the company, no doubt about that. So price to sales trading at 12 to 16 times, with price to earnings a little bit over 66 to 100 based on non-GAAP forward versus trailing. and enterprise value to EBITDA over 56, and of course, not to mention price to cash flow at over 35 to 38 times right now. So valuation is extremely high, even though it is considered to be a pretty good stock, pretty good company, I would say, in cybersecurity space. So 231, that's going to be that number. So we're going to plug that in, 231 in 2024. And then the number in 2028 is 821. So we're going to plug that number here, 2028. And that gets us to a 37% growth in earnings, in basically earnings per share for the next 4 or 5 years for the company. So that's a pretty strong number. That's a growth stock, right? I would consider Crowdstrike to be a growth stock because of the very strong numbers that we're seeing. So 231, or let's just put 233.1 here, and EPS is pegged at 231. So we are looking at, let's see, probably around 750, or might be a little bit lower, 650, 279, 231. So we can go 625 million dollars, or might be like 550. There we go, $550 million in net income for the company in fiscal year 2024. That's going to be that number. So that's going to be an EPS of about $2.36. When it comes to the growth rate, I'm not going to go with 37%. I'm going to go with 30% growth. 30% growth, 30 times P multiple, 12% discount rate, and a 10% margin of safety. And we end up with a fair value of $64 for the stock. And right now it's trading at 154. So, when we did our analysis, it was still considerably a little bit more on the expensive side in terms of valuation. So that's going to be that fair value. Obviously, it's going to be a tough time getting down to that level for Crowdstrike. And this right here is going to be that sensitivity grid, where if you take, let's say, a 34% growth rate with a little bit of a higher P multiple, then obviously you end up with a much higher fair value for the company. Now, a lot of it is also dependent on the share dilution, right? 16% is quite a lot. Look what happens if I do 0%, right? Look how the fair value changes. If I hit enter, fair value jumps to 134. Can you believe that? It actually more than doubles, right? It's crazy how share dilution is obviously a big reason as to why the fair value is lower. But I think it's safe to assume that if numbers are getting bigger and bigger, Crowdstrike's probably not going to dilute shareholders by 16% anymore, just because they've done that in the past. So even if you go with, let's say, 8%, fair value ends up a little bit over $90 per share, which is pretty much in line with where we originally had that trade idea for Crowdstrike back in January of 23. So, this right here is going to be that level. Unfortunately, it's still pretty low, I know. And even though I love the company, I want to have some exposure in Crowdstrike or cybersecurity in general, I can't quite justify the valuations unless, of course, earnings parabolically go higher, so much so that the valuation comes down dramatically. So that's going to be the level. Again, you can kind of see for yourself the different assumptions being made for share dilution as well. And again, the fair value is going to be a little bit over $91 per share for me personally, which is going to be very much in line with the support that we have talked about for this company as well. So hope you guys enjoyed this video. Let me know your thoughts down in the comment section below. As always, make sure that you drop a like, subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. Remember, there is a 16% discount that does expire at the end of this month. And you can access all the buy and sell alerts, options alerts, trade ideas, and after that, it will go away forever. So only 3 more days left for you to access those discounts. As always, happy investing. I'll see you all in the next video.